everybody. This is John Blank, Zacks Chief Equity Strategist and Economist. Today is Monday, November the 4th, 2024, and I'm going to finish up with the energy stocks, focusing on the three remaining oil sectors. You know my strategy here: top stocks by market capitalization, top stocks by maximum number of covering analysts, and top stocks by the largest 1 month percentage change in the current annual earnings estimates, the Zacks Rank. Important function. Okay. These are my views, folks. I do have a PhD, and they're not necessarily the views of Zacks Investment Research. Let's jump right in here today. This is the review table for the energy sector for oils. I want to point out this is Oil-Miscellaneous 43, oil integrated 44, and oil and gas pipelines 45. So here's 43, there's 44, here is 45. Similarly here, 43, 44, 45, and over here. This will be, as always, market capitalization. This will be the Zacks Rank part, and this will be the number covering analysts. So, of course, this one and this one should be somewhat related, and they are. Of course, Total Energies by market capitalization is the biggest in the world in our listings. I'm sure there's state listings out there that have other groups, but these are the ones that are in these sectors for us. Equinor, Phillips, Marathon, Valero, Targa, Western Midstream. Those are all in that miscellaneous category. Down here, you've got ExxonMobil. Of course, they would be integrated along with Chevron and ConocoPhillips. So those integrated will be in the 44s, and then down here in the 45s, of course, Enbridge, Williams, Enterprise Product Partners, ONEOK, Kinder Morgan, Pembina, Plains All American, and Ultra Par. Those will be pipelines. So keep this in mind. You've got these. I always, of course, like this, the size of the companies and the footprint they have in the marketplace and in their businesses. And then I like over here just to see what the differences are from current covering analysts. For example, ExxonMobil is not even very well covered, whereas BP and I'm sorry, ExxonMobil right here, they are well covered. BP, ConocoPhillips, Chevron, Hess, like you would expect. However, Total Energies not as well covered as some of the other ones, like Phillips 66. Small changes in coverage can make a big difference. So keep in mind, you really want coverage, because otherwise other investors, big investors particularly, are not playing the game with your stocks. And that's always something you want to have in mind. You want them on this list. Okay, latest trends and developments. We'll talk a little bit about biofuel consumption here. This is road biofuel. And I just want to point out there's, biofuel consumption has been growing since 2010 quite well, particularly in Europe, and it's going to keep growing through 2030. And beyond that, you're going to see some really nice growth in particularly the accelerated case. This is the main case. This is the accelerated case. So keep in mind, this is all going to come from road, aviation, or marines, boats. And it can come from a lot of different sources. Down here, of course, road's going to really ramp up in the accelerated case. Aviation, maybe even more than road. Planes, of course. That's the thing that's going to happen there. And then, of course, look across these areas, and you can see that these markets are quite dramatically big in some circumstances. And it can take off outside of the developing world too. That's the rest of the world here. So, but just keep this in mind that biofuels are going to be a subject going forward because of the climate change issues. And these companies, while they've always been in the oil business, are actively exploring this segment. All right, biofuel by sector. Okay, of course, here's the ethanol feedstocks, a lot of some sugars, some starches. There's also vegetable oils, residual oils. All of these things can produce biofuels. Okay, aviation biofuel in North America could be huge, absolutely huge. And of course, in Asia Pacific, reaching the size of Europe in time. Keep in mind here, maritime biofuels in Europe look like it's going to be a really strong growth sector. Again, a lot of this is regulatory related. kinds of rules governments, the EU, the United States, or mainland Chinese and Japanese and ASEAN groups in Asia take. So keep this in mind. All right, so here we got the pattern of all these different demand for biogases. Biogases. This is for, as you can see here, largely for electricity and heat. So in the European Union, biogases here, not biofuels, is a big heat use source. Biogases are. So what will this do in Europe? It's already been just gigantic versus the United States, and it's going to get bigger and bigger and bigger for electricity and heat, particularly in Germany, the UK, and Italy. This is, of course, related to the current situation in Russia. They're obviously wanting to be more and more independent of that source, so they will be pushing this harder. But don't be surprised if it happens here in the United States. Not so much in China. India further back in its development phase here. But again, this has been going up from this level to probably 2.5 times that by 2030. So in the last 20 years, it really has become a thing, biogases. So again, let's go through it again. Biofuels, biofuel consumption and demand growth, and biogases. All of this, biofuels and biogases, is playing a role in the background of trying to clean up the reputation of this business. All right, let's get down back to the top stocks market capitalization. And of course, always we can go back to this first chart. That is your source for all the tickers, company names, and the market capitalizations. So let's get going. Return on equity charts. Of course, Oil-Miscellaneous. Marathon USA really sticks out here. Here's Equinor. They all spike in the COVID period as the ramping up of production took place, and then they, of course, cooled off, just like all goods prices, and are still cooling off for the most part on the return on equity, because this is really what they're selling things. Again, you're going to see this big thing here. This is Hess, Sunoco, and ExxonMobil's right here. Return on equity in ExxonMobil's worth pointing out, that's 16%. Over here, you've got some much higher numbers like Marathon at 64%, WS and now Sunoco at 42%. Obviously, this will be priced into the shares, but some of these oil integrateds are very low ROE stocks. BP's at 12.75, Chevron's at 14. ExxonMobil at 16 is, kind of quote the star. Get down here, you got the pipelines. Again, these are kind of all over the place. MPLX is one that sticks out as a nice looking stock. You might want to look into that one. EPD is a really good one. I will get back there and talk about it a little bit. That is looking at a 20% range, and it has been much lower in the past, now much higher. So there is things to look in. One Oak is here. There's that big spike and then a drop. And of course, Plains All American, Kinder Morgan down here at the lowest end. Of course, some of these pipelines don't earn much money, but they run a lot of revenue through these groups. Forward PEs. Of course, to no surprise, Marathon, with its high ROE, has a high PE ratio. Some of these are going to be much lower, though. Equinor is kind of low. Sunoco is actually quite fairly low. And they're kind of skipping around here. There is signs here down in the pipelines. WMB is picking up speed. So as is Kinder Morgan. There is some buying of these valuations, but I would tell you that it's nowhere near where it used to be in this one period here where there was a lot of surginess in the oil pipeline. So are we going to get back in this period with the oil pipelines? It's worth thinking about. Over here, the integrateds are depressed. They have only gone back to P ratios that, historic terms are seen 15 years ago. Obviously, there was a little bit of buying in that 15-16 period when there was excitement about the shale fracking. Boom. People picked up these stocks for a while, and they wrote them back down again. Didn't work out as well as people thought. Total debt. Interesting to point out Enbridge, ENB, and Energy Transfer. These are great pipeline groups that have been building up pipelines by buying and using debt. Um, Shell sticks out here. They've been cutting down on the debt over the years, but they built a ton up through the pandemic, and then now they're cutting back as well as BP. I assume they're even ExxonMobil cutting down on their debt because they've been profitable and they've been paying it back down. They didn't want to be up there. They had to get that back down, and they all have. So the integrateds are paying off debt with their cash flow. The pipelines are building debt because they're increasing the size of their pipelines. And then, of course, over here, you've got the miscellaneous groups are doing all kinds of things. There's Total Energies at the top. Marathon's a little below that. There's Equinor. So always stories, always things to look at. Reinvestment rates, of course, the more you reinvest in a business, the more you feel that there's growth here. So like ExxonMobil's 10%, paying out big dividends and buying back that debt, not really investing in the businesses where Marathon growth stock really is doing the job there. So keep in mind, really here, I would be mainly focused on just finding out where they are relative to their peers inside a given industry. All right, we're on to the top stocks by max number analysts. And here is the wonderful stop we always go to. Price earnings surprise and earnings consensus for, in this case, the top 12 stocks. I've got 8 of them showing up here. So do we have any good news stories here? A lot of these up on the top here. PBF, DK pulling back, MPC pulling back, and PSX all pulling back from earlier this year. So is this a nice entry point? Estimate revisions are somewhat coming down, as you can see here. So the answer is maybe not. This is very much a rational movement. But on a forward look, if those estimates turn up, you're getting into nice spots on the chart from a price entry perspective. So keep that in mind. Down here, you've got another, this is Occidental. That's what Buffett likes. And you can see it's also been selling off here over the last 2.5 years. ExxonMobil, little more stable pattern, but the estimate revisions are really not supportive. And BP showing you that cutting in the estimate revisions down. So everywhere you look, it's what this is probably telling you is there's a Chinese slowdown out there, and nobody's really yet buying the story that it's turning around in terms of demand growth in Asia. I assume that's the case. I also assume the case is the electric vehicle production and issues in the US, China, and Europe are all starting to have effect, pulling them back to here. However, there will be a time when this story gets updated, and I would not keep this as a firm hold picture because, of course, we are at these lows, and from a value perspective, these are great stocks. Earnings per share forward 12-month look. Again, you're going to see Marathon here leading the way, just spiraling upwards from the 2020 period. Really a story to know about. Over here, you've got Chevron out here in California. You'd like to think they're not doing well, but they are actually doing quite well. Hess has been in a merger situation. ExxonMobil down here at 8 on the earnings per share, still doing quite well. And the pipelines, of course, ONEOK is just spiraling north. That is the natural gas pipeline. EPD, you can see usually in these pipelines, it's pretty smooth all the way through. They play on that way pretty carefully. Some of them don't, though. PAGP, I don't know much about the story here, but it had a big spiky episode during the pandemic. I assume they shut it down for a while. Enbridge is right here, a little more typical, very stable patterns over the last 10, 15 years. ONEOK you're going to want to look into why they have moved their earnings up so dramatically. Fascinating. Like I said, you think this industry is not interesting, but it certainly is. Like, where will we go with Marathon, Chevron, and ONEOK? Those are the stories to look into. And they're really quite different relative to their peers. And of course, that is the main issue. Profit margins. WES jumping out at us, building its profit margin. Want to look into that. Over here, we've got, of course, where is ExxonMobil? They're at just under a 10%. They'd be the base case. You can see BT is much lower than that. Hess is much higher than that. And over here, all kinds of stuff happening here with profit margins. Plains All American at 2%, Energy Transfer at somewhere around 5, but then you get Williams at 27. Um, I don't know the stories of these Kinder Morgan's, Williams, and all the other pipelines enough. But again, it's within these industries you want to focus on, not across them. So, Oil-Miscellaneous, keep these together. Oil Integrated, keep those together. Pipelines, keep these together. Total debt to capital. Like to see stories here that are kept in their industries. Again, here's miscellaneous, here's integrated, and here's pipelines. Probably not as relevant for investors as other stops, so we'll skip it. And we'll move through CapEx depreciation. Again, you can see here there was a lot of CapEx for some of these pipelines back in the early building up through 2016. They were building pipelines and getting very involved in all this stuff. So worth thinking about the history of what Enbridge did in the early, 12 years ago, whether that comes back now, whether well worth looking into Enbridge. So somewhere here, you've got these big, bursts during, I think it was when the Saudis were raising the issue of energy prices and getting high prices and getting people excited about this business. Can that happen again? Always possible for Middle East crisis or, in this case, the Russian situation. But it's being dampened now by the Chinese growth story, which is not recovered, and we're still waiting for that stimulus story to play out. All right, final one is, where is the active estimate revisions? Where are the short-term stories in this business? So again, here's miscellaneous, here's integrated, and here's the pipelines. Energy transfer has been a big, big story the last 3, 4 years. You may not know that story, but there's your revenue growth, and it has gone from 42 billion to almost 100 billion. They're building a business here. That's why they build on the debt. All these names, of course, you're going to want to keep these together. And then, of course, these are very, very stable. These are the big, big groups. The big, big numbers. Notice these are 230 for the integrated. This is in the 260s. These are a lot smaller, these pipeline groups. So in this case, I would pay attention to the sheer scale of these businesses. Somewhere down here, though, of course, there are smaller groups that we're tracking. You want to look into those. Maybe, for example, VIST looks interesting. They have been building a business. So this is a great stop for looking about the groups that are building businesses. ET and Plains All American are definitely building businesses over the last few years. You're going to want to look into those stories. Cash flow yield. Again, you're going to want to focus on these groups and these groups and these groups for cash flow yield. Obviously, better group cash flow yield. Here is the better ones. Here is the better ones. Here is the better ones. Cash flow is a great concept because that is really closest to actual underlying business success. This is a great chart. I think it's really noisy in a lot of respects, but I would pay attention within the charts to the better performance in these areas. So keep that in mind. Price to free cash flow. Again, these charts are not terribly helpful, but the price to free cash flow relative to peers, so you can think about these businesses, is helpful. Enterprise value to sales. Again, we're looking for increasing enterprise values. That's showing some interest in these stocks, and you're going to find it somewhere. Again, here, Enbridge is coming up. Kinder Morgan's coming up. Here, TRGP looks interesting. And over here, you've got DTM showing some strength. So interesting always to keep the valuations. I like to keep this in the back of any pack because the valuations come second to the bigger story, which of course would be those revenue growth. That would be my big chart here. Earnings pureness, CapEx and enterprise value, free cash flow, ROIC. These are within these three groups. You can see this is really quite different here. For example, down here, pipelines are going to be lower return on capital. The integrated and miscellaneous have a big spikiness in return on capital during COVID, and they're coming back down to more historical levels. This is not unsurprising. CapEx, you're seeing a buildup in the integrateds, they are spending money on capital expenditure. Worth knowing this. Obviously, they did a ton of CapEx till they didn't, and now they're coming back to doing it. Earnings pureness. Again, you'd like people to really have underlying businesses that are, putting it back to work, and these are in the 80s and 90s, which is not what you'd like to see. Enterprise value to free cash flow. What looks attractive here? I would tell you the pipelines are looking attractive, very stable. And miscellaneous is kind of at the top of its range. The one that's not doing quite well is the integrateds. Those have been coming down. So this is really an interesting area for the three sectors to think about. Fascinating stories, always worth looking into. And that will be it for me today. Thank you for attending. I hope you liked it. And if you want to get further into this, you're going to need these charts, and this is where you can get them. 866-794-6065. Email us, strategycall@zackspro.com, or find us on the internet at www.zackspro.com. We do have a LinkedIn page at Zacks Professional Services, and you do find an occasional tweet at ZA Tools. But in general, if you want to get a hold of these slides, first three pieces of information are the key ones. 866-794-6065. And email us at strategycall@zackspro.com. Probably the easiest for all of you to do. That's it for me. I hope you enjoyed this.